Good afternoon. This is Tom Alexander. It is Sunday, April 23rd. It is 3:25 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend video addendum to the weekend written report that you all should have received. If you are finding me on YouTube and you would like a free copy each week of the weekend report that I do, email me at tom@alexandertrading.com. You shoot me an email, say, please put me on the list. I'll put you on the report. You'll get a free written report every week, and you'll be notified when I post this video report. Okay, we have quite an extraordinary week. Actually, we've had an extraordinary 3 weeks going on in the U.S. stock indices. Let's take a look. And here you see the 4 primary U.S. trading indices, the cash markets. I'm going to go through them one by one. This is the SPX. And since March 31st, the SPX on a close-to-close basis is up 0.59%. The NDX is down 1.37%. The Russell 2000 is down 0.61%. And the Dow is up 0.62%. So what, if you take all this together, what does it mean? What it tells us is the market is in a state of uncertainty. The market is in a very two-sided trade and balance areas of one degree or another. A two-sided trade and balance are really the same market condition. You have a little bit of a different look when you're thinking of the typical market profile Gaussian shape of a 4 or 5 day structure where you have the tails and you have the nice identifiable mode of the structure. Well, you might have that in the NDX at the moment. You certainly have it partially in the Dow coming into last Thursday. But the bottom line here is that we're in a market that has been trading in a very narrow range. All 4 of the indices, all 4 of the primary U.S. trading indices clearly are trading in a very narrow range. They're getting extraordinarily compressed. Now, it's an auction market precept that markets follow the same process of development in all degrees of time all the time. So what does that mean? Well, it means that the market is either in balance or imbalance, and it's constantly transitioning in all time frames from one phase to another. Well, we are in a market condition, we're in a market phase of balance, so we know imbalance or a trend will follow. The current chop of the last 3 weeks, chop, churn, and balance the last 3 weeks is particularly important because we're very, very near higher degree key reference areas in the ES or the S, not the ES, but the SPX, the cash market. It's this 4,200 level. We have tried to bump up it against it a few times and can't quite get there. It's a very, very important level. And then you have in the NDX, you have this 13,204 level. Above 13,204, there's nothing until you get to the August highs. And we can go down the line. If we look at the Russell has been in and remains in really chopping around the lows of the quote unquote bear market that we may be in, maybe not in. Nobody knows. It depends on who you want to ask as to whether or not we're in a bull or bear market. And for practical trading purposes, it really doesn't matter. What is important right now is we have this multi-week two-sided trade that is closer and closer to breaking out. What does that mean? Well, breaking out means it's going to trend up or down for more than 2 hours. And that's about all we've had, 2-hour trends for the past 3 weeks. So you're looking for some multi-day trend to begin very soon in the indices. Well, which way is it going to be? I don't know, and neither does anyone else. Now, I have mentioned this to my membership. I am positioned short. I'm not particularly comfortable being short. I have been short, and it's been a churn. I will not hesitate to cover that position. In particular, if I see the Russell above this key reference area you see on my screen now, and the SPX gets above 4,200. If those two things occur, I think it's likely we will see acceleration higher if both of those things occur. Okay, let's look at a couple of other things that are interesting here. The technical situation of the market. Well, I landed on VIX, so we'll talk about it. Okay, VIX is at a level that if we are in a bear market, we should be near a top. Maybe we have some sort of false spike into maybe slightly through 4,200, but it should immediately fail if we're in a bear market. VIX is trading at its lowest levels in well over a year. It's trading at its lowest level since actually before the 2022 top, into late levels last seen in late 2021 as we made that top at the very beginning of the year in 2022. So now if we're in a new bull market, what will happen? We're going to rip through 4,200. And you'll see VIX generally continue to decline and stay and get lower and lower and lower. Okay, let's look at breadth. Now, the important thing about breadth right now, I want you to, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. And what these two things reflect is a very weak breadth at these levels. Now, have to be careful here because all it takes for this to turn around is, again, for the big money to start pushing buy buttons. And if buy buttons are being pushed by the big institutions, breadth is going to expand. On the other hand, if there is a catalyst next week and the market begins to sell off, the institutions will start to press the sell buttons. And if we see that happening, then sooner rather than later, we're going to see another negative or another cluster of negative 2,000 breadth readings. If you look down here, I'm going to reduce this and this. Eventually. Now look at breadth. Look at the range that we've seen breadth. Breadth, it reflects price. It's perfectly reflecting price at the moment, where you have breadth in an extremely narrow range, both up and down. We really haven't had, and this is closing breadth. We haven't had a close above about 1,500, and we haven't had a close below about 1,200 in 3 weeks. So the internals of the market are perfectly reflecting the price condition of the market, which is a very two-sided trade. So everything is consistently lining up here for some sort of conviction to kick in next week in the market. Now, the last thing I want to share with you is another view of breadth that's a little bit shorter term. This is the SPX. This is a 30-minute chart of the cash session. And Tuesday, Wednesday, and Thursday of last week, breadth did not trade above 0. We did not see positive breadth last week for 4 days. That's unusual. And once again, this is reflecting what we're seeing over here in this daily breadth view of the market is really compressed. There's going to be a very significant and very sharp expansion in breadth, and the market's going to rally strongly, or we're going to see a contraction in breadth, and the market is going to take out the levels that I have highlighted in the written report. Again, if you're not getting that report, you want to get it, send me an email at tom@alexandertrading.com. Do me a favor, if you found value in this, like it, subscribe to the channel. Please make comments. If you have questions, I'll answer all of them. You guys enjoy the remainder of your weekend. I'll be in touch.